After a crappy end to a dismal 2022, crypto seems to have found its mojo again. Prices have been rising over the last week, and BTC has hit that psychologically important 21k level, meaning the bears have taken a beating, the moon boys have found meaning, and suddenly everything is just peachy again. So, what gives? Why, in the midst of a crypto winter and a bear market that's very much got this sort of vibe going on, is crypto suddenly pumping? What's driving this rally? Can it last? And are the snows of winter really giving way to spring? Let's find out. Well, if you're looking for the catalyst, then the answer is, perhaps counterintuitively, inflation. On Thursday last week, the CPI data, that is, the official measure of inflation, was released in the United States, and the news was good. That's right, good news on inflation, and there sure has been a lack of that in recent months. The data showed that inflation in the US had fallen from 7.2% in November to a much healthier 6.5% in December, suggesting that the Federal Reserve's aggressive hiking of interest rates since last March is having the desired effect. This, of course, fired up speculation that Jerome Powell and co. could be ready to start easing off on hiking rates much further, or even pause altogether. This, in turn, would suggest that the day they finally start taking interest rates back down again, the famed Fed pivot, may be getting close. Add in the fact that 6.5% was what the markets were expecting. Remember, markets love being proved right, and you have a recipe for some serious exuberance. A couple of things are worth noting here, though. The first is that 6.5% inflation, while a big improvement on 7.2% inflation, is still, well, pretty high inflation, and well above the 2% that is the generally accepted rate that most central banks, including the Fed, work by. That said, it is much, much worse elsewhere, of course. The other thing to note is that Jerome Powell has been pretty insistent on the fact that he is determined to keep rates high for as long as is needed to, quote, get the job done on inflation. He's prepared to do this even if it causes further damage to the US economy and labour market. This is because he and many of his Fed colleagues view persistent high inflation as being a much more serious threat to economic well-being in the long run than some supposedly short-term pain right now. The Fed's terminal rate, that is, the highest level interest rates can rise to in this rate hiking cycle, is above 5%, and that means those rates still have higher to go. While there are certainly dovish voices within the Fed who are calling for a pause and/or pivot sooner rather than later, don't underestimate Jerome's determination to go down in history as the man who slew the dragon of inflation. Just saying. Anyhow, despite the reality of the situation, that inflation news was enough to get buyers excited, even before it was actually released. But what buyers exactly? Well, the answer lies in the crypto that's been leading the rally, and that is none other than good old BTC. Yep, Bitcoin has outperformed most major alts in this rally, and that tells us that it's most likely institutional buyers leading the charge. If this was a retail-driven frenzy, then we would have seen alts lead the way. But, barring a handful of exceptions, this wasn't the case. Bitcoin dominance, that percentage of crypto's total market cap that's tied up in BTC, has increased over the course of the rally, which strongly suggests that this is very much a case of institutions allocating some BTC to their risk buckets. No one else really has the financial firepower to get this sort of rally going. And even though market sentiment is the strongest it's been in months, it's highly unlikely that enough retail buyers have decided all at once that now is the time to buy the dip. Also, consider that the rally began before the CPI data was released. Now, this suggests to me that the 6.5% figure could have been leaked in advance, and if that were the case, well, you can be pretty sure that all the Fed officials' friends on Wall Street would have been much more likely to get the heads up than your average retail buyer. That is just my theory, though. Interestingly, another theory was put forward on Twitter just a few hours ago by Ram Alawalia, a finance and digital asset expert with whom I had the pleasure of chatting a few weeks back. As well as highlighting the importance of Fed policy in all of this, he also pointed to the fact that Larry Summers, the guy pipped to the post of Fed chair by Jerome Powell, and who consequently, quote, has the ear of the Fed, stated on primetime TV on Friday evening that the Fed's battle with inflation may be nearing its end. Ram suggests that, quote, one of the big macro desks listened and went long Bitcoin. Now, Larry has been hawkish on inflation, that is, in favour of rate hikes, and so such a statement can be seen as quite the surprise. Whether Larry is responsible or not, Ram is definitely on the money when he identifies the Fed as the main driver of asset prices. And Ram's Twitter is linked to below, and he is well worth following, by the way. Anyhow, as we see, every time crypto prices start heading strongly in one direction or the other, the move to the upside or downside is then exacerbated by good old leverage traders getting liquidated. This time, it was the turn of the short sellers, that is, the bears, to feel the pain as the market moved against them. All those who had bet that crypto prices would fall suddenly found themselves victims of a classic short squeeze. Prices moved up rather than down, for a change, and those who had bet that the market would go lower suddenly found themselves obliged to buy the assets they had shorted to cut their losses. Now, this added buying pressure meant prices were pushed higher still, liquidating yet more positions, causing further buying, and so on and so on. This is known as cascading liquidations, and when markets start making moves, these guys are rarely far behind. This then meant that some altcoins, notably Aptos's APT and Solana's Sol, were able to make some sick gains. Having endured a terrible few weeks thanks to their close affiliations with FTX and Alameda, both had been shorted pretty aggressively, meaning that there were lots of traders forced into buying them when the market pumped. Hence, they were the biggest gainers of all. Add in the good news for the likes of Avalanche over its partnership with Amazon Web Services, and this recent pump doesn't perhaps look quite so irrational. So, is the bear market over, and is it up only from here? Well, much as I would love to be wrong on this one, I don't really see how this pump can last. On a macro level, nothing has changed. The Fed might, and I stress might, be considering a pause or a pivot, but we'll have to wait until the FOMC meeting on the 1st of February to see whether the expected 0.25% rate hike comes to pass or not. I, for one, don't happen to think Jerome is ready to back off now. Meanwhile, all the headwinds buffering the wider global economy are still blowing strong. Yes, the likes of Avalanche's AWS partnership do indicate that crypto is continuing to integrate more and more with other sectors of the economy. But as far as prices are concerned, there's still very little liquidity in the system to sustain a rally for much longer. There is also the fact that DCG is still in a whole lot of bother and is reportedly considering selling assets to keep the lights on. Assets from FTX will be sold at some point too. And for those technical analysis fans out there, the Relative Strength Index, or RSI, is currently at a 4-year high, which suggests that BTC is now extremely overbought. So, a correction does look likely, though when exactly it'll come, well, that is impossible to say. And of course, in the words of John Maynard Keynes, quote, markets can remain irrational longer than you can remain solvent. We may see this pump play out for longer and BTC pull the market past its pre-FTX levels. It would run contrary to pretty much every bit of received wisdom you can think of, but hey, this is crypto. All I'll say is that if you are in profit off the back of this pump, then it would be worth considering taking some of those profits off the table. Not financial advice, of course. And anyway, guys, as much as this could be institutional dosh driving the market up, perhaps the primary catalyst for everything we've seen recently is, in fact, the outfit sported by Alejandra Guayado, El Salvador's entry in the Miss Universe pageant on Wednesday. Did Satoshi ever imagine a Miss Universe entrant would carry a Bitcoin-themed staff on stage? I guess we'll never know.